Hi, welcome to the Market Alert for Friday the 15th of May 2015. And starting off in the 5-minute chart, I recorded yesterday's price activity. You can see here that we see the market moving higher just before 1 p.m. there as the market traded above the 18,150 level in anticipation of the unemployment claims core PPI and the PPI month on month. This was released, and if we just have a quick look in the news there for yesterday, PPI, you can see it was actually forecast higher. It came out lower, so immediately we've got some bad news in the market there, but nonetheless the market then attempts to move back to the upside. Like I've said before, at the moment they're discounting bad news because they want the market to go back to the all-time highs. So let's move on to the beginning of the session. You can see their prices being driven up towards the 18,200 level, and of course this is 18,280 is the all-time high as well, so it looks like the market's having a bit of a push towards this at the beginning of the session, but runs into a brick wall as you see prices coming off this level. Immediately we see that prices are now getting into a sideways range as they see the toing and froing of prices there. We then get a triple X signal for a return to the upside. The market fills this order, and then we see prices once again trade and struggle with the 18,200 level. We then get a potential sell signal. We're stuck in this sideways range. There is no news until 4 p.m. when Draghi actually spoke, and that wasn't listed yesterday, but that's why the market is sideways, because there was no other economic news. So we see this trade being taken out there for an 11-point loss as the market moves towards the downside there. Stuck in this sideways range, you see market driving down and then coming back, and you see, if you look at the volume, you can see this increasing as well as the market's brought back. They don't want the market to go down. This is evident from the fact that we had bad news here and then the market still went up, so the market wants to go up. We're heading back to that 18,280 level, which we'll have a look at in a moment in the daily chart. So now we see the volume increase here as well as they brought the market back, and Murphy's Law then takes over, and we see the market drive through the stop there, and then we see prices drive through the scalp and then run out of steam once more. You can see the volumes dropped off immediately. There is nothing to drive this market through. This is purely the market makers just driving prices to the upside, and you can see this is being done on fresh air as the volume starts to drop off. So let's just keep going forward to see what the market how it unfolds. In fact, we'll have to go a bit further because for some unknown reason it didn't display the prices, and then you'll see them come back in now. There we go. So the market went into its sideways range after going through the 18,200 level. The next upside target is 18,250. We're now just at the point where Draghi has spoken, and you'll see prices have a bit of a push to the upside once more. And as they start to move, I've moved to the daily chart so I can have a look and see how far away we are from the all-time high, and you can see how prices are heading back towards this level. So there you see prices being driven higher off the news, and we see some professional buying there. We're now in the quiet session, but like I say, the market would have actually stayed on this line. Whoops, let me just bring this back. Would have stayed on this line on the 18,200 had Draghi not been speaking. But then you see prices having a go at the 18,250 in just a minute. And again, I'm just having a look to see how far away we are from the 18,280. I know we're not at the 18,250 yet, which is the next blue line, which you'll see in just a moment. So when I come back, having watched the prices in the daily chart, we can see that they've hit the 18,250. There's 30 points away from the all-time high. The problem is we've only got the evening session, and there are no economic news items to move this market up to that level. So the market is likely to trade sideways from this point forward. and that is precisely what the market does. You'll see it come back up to this level, so this is the second time now we've gone towards the 18,250. The volume is incredibly low, so there's not really that much activity, it's just being held there. We get a potential buy which is not filled, and then we get a PTI there to the downside. You can see now I've just rescaled the chart, and once again now over to the left we've got the support where we saw the buying coming in on the left here. So once again, if the market's got no reason to move lower or higher, it will use these points to actually then trade in a congestion sort of consolidation sideways range. And there you see the buying coming back in off this area here, and then the market stopping out the as you'll see in a minute, it moves back up towards the 18,250. We know this has been a bad place for the last two attempts. The market's only gone to it and failed to close above it. Again, you're keeping in mind that there's no news in the background. So using this information, let me just wind this back. I just want to show you something. At this point here, you've got around 10 points on the table as the market comes down to this area, and because of the quietness of the market, there's no news, there's nothing to really drive the market. If you've got a situation where you've even got 10 or 11 points, then you can move the stop to break even to actually reduce the loss, or you could take half the position off the table. And I'm only saying this because the market is so quiet at the moment. It sort of has this initial hour and then becomes very quiet. So if you get signals and you want to trade them, then you can always just take small amounts off the table and just watch the market as it moves lower. And here's a tip for you: if you watch the highs of these bars, they're actually getting lower, and then as the market moves forward, you'll see it starting to find support. As the market here, you can see the volume is more or less the same as the previous bar, and yet it hasn't gone lower. So there's the first clue. So you may want to consider moving the stop to break even. You then see prices starting to move back, and it's easy to move the market back up on relatively decent price bars when there is nobody else around trading the markets as well. So now you're seeing the market being brought back on very light volume, but that's because nobody wanted to sell in the down move, and that was seen by the low volume as well. So this green bar is where those that were short, the stops have been taken out, so they've had to buy back. This is in the real physical market, so they've had to buy back, and then the market uses that momentum to move prices back up towards the 18,250. And then you see the market, this is now the third time the market's been at this level and fails to go above it. There it attempts to, see there, and then we've got the selling coming back into the market, and now the market wants to switch to the downside. You see the selling there because nobody wants to break through this area. There's nothing or reason or justification to go through this to go up to the 18,280. That would have to be justified, and there's no economic news to do that. So the 18,250 is now a resistance level, and you see the market then move lower. Once again, you've got this triple top. So again, you can avoid trade. You know it's quiet, there's no economic news, there's a resistance here, psychological resistance. We know the high, all-time high is 18,280, and once you get into these levels, it's going to take a lot to actually drive through in order to move back to that sort of figure. It's going to need a decent economic news item. So once again, you see prices coming back, and what do? They find support at the left hand side. Once more, we're getting into this sideways channel of trading, and it's just pointless trying to trade during these sort of quiet evening sessions that we're seeing at the moment. You can see there again now the market's finding some support, and once again we see the market coming back because of that support that we have over to the left. And then we're down to the lateness of the trading session, and you'll see the market finish off there. So these last two irrelevant, and then prices going into the close there. But that's how the market panned out yesterday, and it's the lack of economic news once more that kept the volatility and momentum down to a bare minimum. So let's have a look at the daily chart in more detail. So we're in the daily chart now. You can see yesterday prices driving higher. There is no volume in this market. It is incredibly low as far as this market is concerned. There's no sort of professional buying moving the market. Every time it's moved higher, it's been on low volume, which indicates that the prices are just being marked up and not driven up with new buying. Today we have the UOM prelim consumer sentiment out at 3 p.m. This is forecast to be just slightly lower, but if this comes out higher, they're going to use this as the excuse to finish the week with the Dow at the all-time high. If it comes out significantly lower, then they will reverse the market, but what they'll be looking for is to drive this market to an all-time high as we head in towards the summer months, when it tends to be a time of quieter trading, which is the last thing we want at the moment. We want more volatility, but then again, we could be seeing the calm before the storm at the moment. I would like to see this market go up to the all-time high, because it will probably be the last for a while, and then we'll get some good trades to the downside from it. So I don't mind either way. I just like it to break out of this sort of malaise that it's got at the moment, these low volatility short runs, instead of actually running to the next psychological level, which we've seen in abundance for the last 3 or 4 months. But at the moment, the market's just being moved around by the floor traders. And finally, in the implied volatility, we saw 2012 yesterday. Well, that would be Wednesdays. Thursdays is 1133, a big drop off there in the implied volatility yesterday. No surprise when you see how narrow the trading range was after the first hour's worth of trading there. Right, that's it from me. I will see you in tomorrow's edition of the Market Alert. Have a good day, and as ever, thank you for your support, very much appreciated. And as ever, thanks for watching. See you in the next one.